Hi everyone. It's around 10:30 on Tuesday night, and I decided to make a video because I'm very concerned about what I've been seeing in the last couple of days and couple of weeks as it relates to our Discord channel and action in the market in stocks that are bankrupt. What you need to understand about a bankruptcy is that while the government may come in like they did with General Motors uh, way back when to save the company, does not necessarily mean, and in fact, in 99% of cases, does not mean that there will be anything for the equity holders. The chart that I have on the screen right now is Sears Holdings. This is the company that owned Sears Roebuck and Company and merged with Kmart. So they took one really crappy big company and merged it with another really big crappy company and made one much bigger and worth less company. The reason for that is because there was a lot of real estate value, and the people who controlled the fund that controlled Sears Holdings sold that and dividended it out or used it for whatever they chose to use it for. But as you can see on this 5-year chart, the stock never recovered. In fact, it's still trading, and we'll go to a daily so that you can see it is still trading in the neighborhood of 18 cents. Now, what you have to understand about a company that goes bankrupt is that there's a long line of people who are ahead of the equity holders. For example, there could be holders of bonds that are backed by the real estate that the company might own, that its stores sit on, which was specifically the case with both Sears and Kmart. But that all got used up. What also got used up were all of those labels and all of those products that you knew about when you went into a Sears that really you could only get at a Sears. For example, Sears owned Craftsman tools. When things got tough, the first thing Eddie Lampert, the one who controlled the hedge fund that controlled Sears Holdings, sold off the licensing so that they took in money for whatever reason and whatever use, possibly just to dividend it out to the bondholders or to pay interest on the bonds. And that was gone. The next thing they did, as the company continued to fail, was they had purchased Land's End. So they turned around and sold Land's End. And the last straw was the fact that they gave their Kenmore line, which is what Sears sold as their product for refrigerators and washers and dryers and dishwashers, etc. The point being that the secured bondholders came first, the senior debt holders came second, the creditors came third, the unsecured creditors came fourth, and if there was anything left over, the equity holders might get that if the lawyers didn't, and if a bankruptcy court judge decided that the money should go somewhere else. As you can see, the stock has had a couple of runs from in this area here between 27 cents and up here to 40 cents. As you can see, they only lasted a day or two. Same thing here. We had a stock selling at right around where we are now, 18 or 19 cents. Ran up for a week, hit a high in the neighborhood of 40 cents, came back down, and is sitting right here. The point of this is that 99% of bankruptcy stocks leave absolutely nothing for you, the equity holder, or the option holder. Another one just like this is on a more latter day. There's J.C. Penney. J.C. Penney looks like it's no longer available on this particular charting service, maybe under a new symbol. Nope. Okay, well, we'll skip J.C. Penney and we'll go straight to the biggest current name in this group, which is Hertz. Now, Hertz declared bankruptcy about 10 days ago. As you can see, the stock was as high as, let's see what this number is, $20.85, and that was as late as February 20th of this year. And then we had the coronavirus and the discontinuation of airline flights and people traveling and renting cars. And so Hertz started on its way down. Now, the day after they declared bankruptcy, the stock traded as low as 40 cents and closed that day 41 cents, having come down from a close the day before at $1.47. One thing that these companies all have in common is the fact that when the sharks smell the blood in the water, they get short the stock, or they buy puts, which they can exercise. As the stock continues down and they're still making money, there's no reason to cover a short. Or you could buy a call against it, knowing it's probably not going anywhere. So the stock sat for roughly 7 trading days, and we come back to last Thursday when it traded as low as 80 cents and as high as $1.87. And as you can see, it closed the day at $1.50. And that was a pretty substantial move. That was a move of 68 cents to $1.50. So it moved roughly 85%. And it continued up on Friday and Monday, and in fact yesterday in the late hours, after hours, it traded as high as $7 after trading as high as 6.25 during the day and during the aftermarket. However, it couldn't really hold that, and it finished the day substantially lighter. Today it had kind of an inside day where it started at 475, traded down a bit, and then traded up to 580. But then there were a couple of commentators talking about it, and the stock fell back. I will tell you that after everybody gets their piece of the pie, for example, I don't know what the fleet that they own, if in fact they own it, or if they lease it, or if there is another company that they've done a sale and lease back so that they don't really have any equity. They certainly don't have much in the way of equity as it relates to the parking lots. I mean, what's a car rental business? In any event, the fact that this stock was trading at 580 and closed at 418, the fact that it even is closing at 418 is just short of absurd. The only thing that could possibly sell this, make it go higher, would be if someone like Avis came in and bought it. And the chances are they wouldn't buy it in the open market. They'd buy it through the bankruptcy court so that they knew they didn't have any liabilities against it. Again, 99% of these deals go absolutely worthless. There was one, and it was recent. Well, not terribly recent, but recent enough for everyone to remember, and that was American Airlines. The issue with American Airlines was that they were bankrupt, but in fact, they did a merger. And so when the stock was down here at $5 or possibly a little lower, in this neighborhood, again around $1.45, they turned around and did a merger. I honestly cannot remember the name of the company, the airline that they bought. But the fact is, the deal worked well. There was a decent coverage that they could eliminate some overlap, and they turned it into a profitable airline. And that lasted right up until the same time, COVID-19, no more flying, and people not wanting to be able to fly, people not being willing to get on a plane with people. And as you see in the last couple of days, because of the short position in the stock, clearly, there has been short covering. There really is no reason to expect that this is purely on the basis of the reopening of America and people starting to fly. The TSA put out information this past week that the weekend they scanned 404,000 individuals in all of the airports across the United States. And while that was 2 or 3 times what they had done a month prior, it was also 83% lower than the year ago. I cannot warn you enough that this is absolutely playing with fire. This American Airlines group is the one that sits next to the 999 out of 1,000 that doesn't work. I could go on and pull up more charts of more companies that have gone bust. I guess the biggest one, and the one that most people relate to, was the government, quote, saving General Motors. General Motors was poorly run. General Motors did not change with the times, and they got into trouble, and they ended up going bankrupt. However, the government stepped in to bail them out. Well, what the government did was they took a big equity position in it for loaning them money. They made them pare it down substantially. And then on top of all else, they did something which was blatantly against the public interest. And they gave the equity that actually belonged to the debt holders to the unions instead of paying the debt holders. There were many, many lawsuits on it. But the bottom line was the equity holders in General Motors, the company that the government said they saved, they got nothing. Absolutely zero. And I'm telling you that if you continue to play some of these, there may be that 1 in 1,000 that works out, or you may be lucky enough to be trading it technically and see a breakout and jump in and jump out. But these are only tradable. They are clearly not investable. Today's announcement with Chesapeake, a company that was bankrupt 3 times by its founder, Aubrey McClendon, and whose stock was recently split, reverse split, 200 for 1. And the chart looks just great. It was coming down. This is a very compressed chart because of that 200 to 1. It actually shows a high for the last year of 550. If you go back a little further, we'll take the 5-year and do it on a weekly basis so that we can see the whole thing. You can see that it actually has a high up here of 2,500. But the fact of the matter is that what has gone on in the recent days, again, is absurd. To give you an idea, if you owned this stock and it closed today 23.75, down 46. If you owned this stock, you would have to divide this price by 200. So in fact, you would be looking at a stock that was worth about 11 cents, even though it's trading at $23. Because if you owned it for any period of time when they did that reverse split, you lost a great deal. The other issue with this, and it's one of the things that helps these stocks along, and I've mentioned it in others like small biotech from time to time, where a company goes and reverses their stock and then turns around and raises money. A lot of the times, the reason that the stock goes up, as is the case here with CHK, is that they shrank the outstanding dramatically. If the company had 200 million shares outstanding and they reversed it 200 for 1, that means that there's only 1 million shares outstanding. Those aren't the numbers for this in particular, but it's a good example of seeing why some of these stocks that are reversed, even the ones that are not going bankrupt, tend to have moves like this, is because they have taken the amount of stock that was outstanding and divided it by the amount of the reverse split. I can't say any more about it, but the facts are the facts. 999 out of 1,000 do not work. You may be lucky. You may be in one that works, or you may be in and out. But for the vast majority, these are not things that you invest in. Have a good evening and be careful out there.